friends, welcome to this session. In this video we shall have a small look at or introduction to the basics of the international standard banking practice. We will look at the very fundamentals of the international standard banking practice. International standard banking practice is the standard practices done by trade finance professionals in top international banks the world over. The common or the uniform things that normally people do in an international trade transaction. This is not just limited to the booklet published by ICC. What we are going to do in this video is just to have a small discussion on this booklet called ISBP. It is called ICC publication number 745, and we shall have a look at what it talks about. Other than the introduction and the basics, it talks about some preliminary considerations. It has some 44 paragraphs, and then talks about general principles, the drafts, calculation and maturity date, drafts, calculations and maturity date. It talks about invoices, it talks about transport document, bill of lading, non-negotiable CBA bill, charter copy BL, air transport document, road and rail, inland waterways. These are the transport documents discussed by UCP. The ISBP also talks about insurance documents, certificate of origin. It gives additional paragraphs or additional clarification on packing list, weight list and beneficiary certificate. Finally, it talks about analysis, inspection rate and phytosanitary certificate, and then the ISBP. So there's a to go more into details of this international standard banking practice, we shall see that this is first uploaded in 2002, and it is called publication number 645, approved by the ICC Banking Commission in 2002. We have a revised version or an updated version in 2007. It's called ISBP publication 681. By the time the 645 was updated in 2007 as 681, the UCP 600 was in place, and this ICC publication number 681 was a companion to this UCP publication, and there was not much changes because the international standard banking practices discussed in the first version was already understood and appreciated by the people. But now, in 2003, this is called the real revision. This is not called an updation, but a revision, because so many changes, the way we look at it has been changed, and so many other additional concepts have been added to this publication. The ISBP clearly states that the Banking Commission cannot anticipate the situations created by poorly or improperly drafted credits. Poorly or inappropriately drafted credits means the applicant and beneficiary have not understood UCP or the credit, or the issuing bank have not given additional professional importance to the drafting of the credit, and because of which there are some problems in the credit transaction. If there are such problems, ISBP may not be able to come to help of such situations. ISBP also says, this publication says, examples given here are those for the purpose of illustration and not exhaustive. So when the example says you can use the word LTD in the place of limited, it is only illustrative. It doesn't mean only for the word limited we can use an abbreviation, for others we cannot. It is only illustrative. These are the introductory concepts discussed in the ISBP publication. The basics are that ISBP and UCP should be read in entirety and not in isolation. The ISBP we should read end to end, UCP we should read end to end, and the concept discussed here should be together applied to a particular situation in a particular presentation under a documentary credit. It should not be read in isolation. ISBP alone or UCP alone cannot be applied to a transaction. If it is applied, one paragraph alone could not be applied to transaction. So it should be read in entirety, and it should be read together in conjunction. The practices described, the international standard practices described in this publication, highlight how the articles of UCP be interpreted and applied. It talks about how these articles should be interpreted and applied. To the extent the terms and conditions of the credit or the amendment thereto do not expressly modify or exclude the applicability of UCP. It means if the UCP says a particular article is not applicable, the interpretation, explanation given by ISBP to that particular article is not applicable. If the UCP is not modified or excluded by the terms and conditions of the DC, then the practices described in ISBP helps in interpreting and applying the UCP articles to the document presented. So these are the basics. This is just an introductory video on international standard banking practices, and we shall look at another video for detailed detailed discussions on the various explanations and interpretations given in ISBP on the UCP articles. ISBP earlier it used to run up to 175 paragraphs, now it is A to Q. It will take 5-6 videos for us to cover the subject. Thanks for watching, keep coming back.